behalf of CrossCheck Media and Biz Talk Today TV, welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, and it's sunny and very warm Scottsdale, Arizona. Okay, and
Really?
with us today is a very special featured guest. Mish Schneider is joining us today. She is the chief strategist at MarketGauge.com. Welcome to Buy, Hold, Sell, Mish.
Thank you so much, Todd and Tobin, for having me. It's great to be here.
Yeah, I like Mish's background better than mine. I'm going to have to improve. Now I'm jealous.
Well, that's a green screen. Oh, I guess I'm supposed to say that, but
No,
yeah.
I listen, I've only been doing television 25 years, right? Do I have a green screen? No. Should I? Yes. But, you know, I'm too freaking lazy.
The only thing is for lighting, you might want to close your blinds.
Yeah, I know.
I just saw a dog go by or something.
Well, we can only hope that that would happen.
Well,
now,
I'm
we
on the
do have a
second
resident
floor.
mascot, PK the cat, sometimes makes an appearance on Buy,
That is
Hold,
true.
Sell.
Oh, so that was a cat, not a dog. Okay.
There you go. So, Mish, I got to start with you. Now, we're coming off of a 1,300 plus Dow drop on Monday and Tuesday to start March. We had a big run up in stocks today, mainly because of the information was coming out of the White House. But again, a roller coaster type of session. Definitely is the time when you have to start thinking about the volatility. Is it going to be here and it's going to stay? But Mish, I'm going to you first because I got to ask, I saw your notes. I mean, the tariff talk that's taking place. Is it good news in the long term? Because short term, we're feeling some pain.
Well, it's certainly, let's call it a gamble, because there is merit to the idea of tariffs, especially if they're a negotiating tactic, number one, as we can see a little bit of evidence of that on some of the rollback talk we're now hearing. And number two is the idea is to be able to encourage more of the reshoring of bringing back manufacturing within the US so that our trade deficit isn't skewed the other way. We're importing more than we're exporting. And that all makes sense on paper. How fast and how furious and how much pain it will cause, and will it actually achieve its goal? That's all the gamble part. Because we know when you have a gamble, sometimes it pays off big and sometimes it falls apart. And so there are other aspects to this. To just focus on tariffs, I think is a little bit myopic, considering some of the other concerns we have.
Yes. Go ahead.
No. You wanted to chime in? Go for it.
Well, no, we were talking for the show, is that, you know, I do sort of feel like my head has been spinning around for the last 5 or 6 days. Forget, you know, I'm going to make a decision right now, but in the next 2 hours, it's going to be completely different. So I was just talking with a client today who said, well, Toby, how come we're like 40% in cash? I said, you know why we're 40% in cash? Because if this thing goes south, we're going to be 60% in cash. And on the other hand, if the theory is right that, you know, don't take him literally, just take him whatever it is, and that these are just negotiating points, they'll meet somewhere in the middle, and then we'll start to get those tax cuts, and then we'll get to, you know, get the merger and acquisition environment to get going. So that was all baked in, and then as you saw, it all got baked out. We went right back to the election. Because, as usual, Mr. Trump needs to be the center of attention on everything. And boy, did he was the center of attention last night for the world's longest speech I've ever tried to not listen to. And so for investors, what I'm looking to you for is, what are you telling investors who follow your advice, et cetera, to not do like what I've done, which is basically go through 2 bottles of really nice bourbon in the last 24 hours.
Well, okay, there's a lot of different points I want to try to make briefly, right? So the first point is, even before all of this happened, back in July, we saw the peak in the semiconductor space. Yeah. And so it was pretty obvious that doing the dip buying that people have been habitually doing for the last couple of years successfully.
Because it's worked.
Yeah, but successfully, right? Yeah. Was actually now going to shift. And we saw that happening. And so as far as what's going on in the tech space, even if you don't know exactly why that was happening, you know, before you found out about Trump winning and tariffs, and now last night threatening the CHIP Act as going bye-bye, all of these things, Taiwan, et cetera. To me, what has really proved right from what, and always, but especially in this last year, is that price is going to rule the narrative. And so I already was starting to talk about the peak in semiconductors. People were asking me why. All I could do was speculate. Now we have more clearing answers. In terms of the second part of that.
Well, hang on one second. When you say price is going to tell us, do you mean price meaning the valuations?
No, I'm meaning the actual technical price. I cut my teeth as a chartist on the New York Commodities Exchanges, right?
Okay.
And this was a place where, talk about the rumor mill. I mean, you think it's spinning now, but back then it was constant. The only difference was we didn't have social media. That's how old I am. And so it was not necessarily that we could see the headlines or look at our cell phones and see the headlines, but you heard the rumors go through because all the clerks were on two phones talking to all the brokers, and they would be jumping into the ping and go, guess what? Guess what? So we had, like rumors. How many times was, oh God, Anwar Sadat. How many times was he assassinated while we were trading gold and silver back in the day, right? So I'm used to that. So really for me, this is where I would keep my charts and I'd say, guys, silver's breaking out. Guys, gold's breaking out. I'd jump in, I would buy it and jump out. And it's that kind of thing is really what I'm talking about, Tob, is that,
okay.
Well, if I may call you Tob for short.
Oh, please.
Is that we're seeing these things emerge through the price, and then we're figuring out what the story is, right?
So when you say the price, though, Mish, you're saying the technicals, the 20-day moving average, the 50-day moving average.
200, right?
Yeah.
Whether you want to look at a weekly chart or a monthly chart, I like to look at all three. But going back to tech for 1 second,
Yeah.
they peaked, and then you started to see all the stories about CAPEX and how much money they're going to have to spend, and that the earnings were slowing down, and so forth and so on. So you say the price came out first. So now let's bring it to, that was July. So as we started this year, everything that was holding technical support, and I like to pick on the small caps, but even if we want to look at NASDAQ.
Well, they're the most cyclical, so it makes sense.
Right. But let's start with NASDAQ. So NASDAQ, was holding major support over really 20,700. And now it's below that. So what has happened, or if we look at the small caps, if we want to look at the Russells, at one point they were trading 2,200 was really the support. We broke that, and now we're threatening really the lows. So basically what's happening all across the board, when I say board, I mean mainly sectors and indices, is that yesterday's support, and yesterday was a long period of time, is now today's resistance. So that's the backdrop. And it's smart to be cautious, because if we can't get through that resistance, what we're seeing is a dump, short covering rally, the hopeful dip buyers, and then boom, it turns back around. And until we see that reverse and we get back over that key resistance, I won't be convinced that the worst is over.
I'm with you on a lot of that, because the other thing, I'm going back to the 80s. Okay, Joe. There was no algorithmic trading, in 1986. Yesterday, according to the CME, your former employer, the algorithmic trading was 82% of trades, meaning that a hedge fund, we have a small fund where we scalp futures, right? Well, we made stupid money yesterday because of this. We were in for 8, maybe 15 minutes, maybe a whole hour almost, right? But the average investor is not scalping CME futures on the NASDAQ, et cetera. That's all being done algorithmically. We had this big push at the end of the day, on Monday, and people are like going, well, how did that happen? Or excuse me, on Friday before. How did that happen? That was 100% mechanical. Those were not human beings saying, oh yeah, I'm going to buy the dip. No, it was the end of the month. You have to square your books. The indexes had to buy stocks, blah, blah, blah. And so I'm going to take the other side of this, Mish, and say that I'm totally with you that the support levels are very important, because there are no fundamentals right now. The fundamentals can change tomorrow. the
Exactly.
fundamentals could, I mean, it was a 25% index. I mean, 25% thing. Now it's going to be 10%. Oh, and then we're going to delay that for a month. No, we're going to delay it for 2 months.
Yeah.
freaking G.
Hey, Mish,
So
and to add,
go ahead,
go
Todd.
ahead, Mish. Go ahead.
I
Go
wanted
do
to
what you
jump
thought.
into that point because really, basically, what you asked me, what would I tell our investors now? And this is exactly what I've been telling our investors and also in different media outlets that I appear on, is that if that is true, if price is dictating narrative, and basically what was yesterday's support is now resistance, then dip buying things that were the high flyers, hoping that they bounce, is not the best strategy. Instead, I would rather be looking at instruments that have been sort of basing out for a period of time. And now they have nothing but upside because at least you know what the bottom line support is. If they break, there's something really broken. But if they can hold and move, and we're having so many examples of that right now, it's almost, I'm actually excited because I've been waiting for setups. Like, let's take one, for example, Adobe, right? I like Adobe. You know, I still like to look at AI, but I've been looking at AI more software than hardware, right? I think that's been tough.
You and everybody else, Mish. Come
Right.
on now.
But Adobe was my pick, right? So yesterday I'm watching Adobe. It looks like it's bottoming. I know my risk is about $10 from where it was. And then boom, all of a sudden, not only did it close on the highs yesterday, but it rallied another $10 today. That to me now is the type of situation, and I can tell you so many like that. Believe it or not, here's a beat up AI stock, could not compete with NVIDIA, but now all of a sudden it's looking interesting to me, and that's Advanced Micro Devices.
I was going to say AMD, right?
Right, because it had a big move yesterday off of a new low, new 60-plus day low, had an inside day today, so it sat within yesterday's range. That means to me that if it breaks out over the previous day high or yesterday's high, tomorrow, you have a limited risk. You know where you're wrong. And that to me is a much better bet. Now, we can talk about the metals, of course, but when I'm looking at equities, I'm looking at a lot of things like that. Biotech. You know, all of a sudden today, I sort of wrote about it this week, and then all of a sudden today, if you look at XBI and IBB, they took out, they were probably the first sector to take out resistance. So now we have a good place of support. Am I jumping in like crazy? No, but I'm looking at some of those stocks, like Moderna was up 5-6% today.
That's so funny you mentioned that. So we certainly use technicals a lot at our practice, but I'm a fundamental guy. That's, so we're a good total mix. So Moderna, we were buying simply because it was selling, 40% below its actual asset value, right? Number one. Number two, it has a whole bunch of legal issues that were coming to fore here. And sure as heck, today, the lawsuit that they had against the guy stealing their intellectual property has held up, right? So that's, but we own it on a leverage basis with a collar underneath it. So we've sort of taken our risk. We're willing to take, like we say, about 5% down. And today I feel, like a genius. And we do it through options, and we do it through even a high yield monthly income of fund. So Todd, this is a good mix. I'm the fundamental guy.
Well, I want to say one other thing. Yes, I am a fundamental person too, by the way, but I never make a decision on putting on a position until the charts set me up. I'm a real hybrid trader, right?
Good.
So like I had themes, and this is what I wanted to bring up, Todd.
Sure.
I'm a thematic trader, or you can call them mega trends or whatever you want.
Me too.
Right, you too. And so I will look at the fundamentals and especially a story. I love a good story about a company. So this year, one of my major themes, of course, has to be made in the USA. And so that is not necessarily every company made in the USA, otherwise the small caps would be doing a whole lot better, is going to do well. But there are certain themes, like, so for example, if we're looking at the vanity trade is what I'm calling it, or the domino effect of the diet drugs, I'm looking for things, again, that might be where consumers start to spend money because for the first time in their life, they're thin. Now, actually, Novo Nordisk just reduced the prices to non-insured people, expanding the audience. I've even read it can go 6%, Mr. Fundamental Guy, of the GDP of people spending money, adding to the GDP because they've lost weight and they feel good about themselves. So that
Right.
opens up a world of stocks. You know, the
Okay.
car companies, I'm still looking at that, especially made in America. Obviously
Right.
raw materials and metals have been like my absolute favorite, but they've been my favorite for years. And
Okay.
so that's kind of how I'm doing it, is like, what do I think has based out, will not necessarily be impacted negatively by tariffs, something that actually be supported in the US, and then again, how consumers are feeling, even though they're cutting back, what might they spend money on instead?
Okay, I like that a lot. Listen, we're going to close it out on that block, guys, because there's so much more to get to with Mish Schneider today. And we're going to talk all about it. She already talked about a few equities. She has some more stock picks, including some surprises on the commodity side. So you definitely want to hear what she has to say. So with us today is Mish Schneider. She is the chief strategist at marketgauge.com. We invite the audience to go there and see some more of what Mish has to say about the markets. And we'll be right back right after the break. Please stay with us.
Buy, hold, sell, brought to you by CrossCheck Management. Hi everyone, I'm Veronica Dudo, and welcome to Buy,
Hold, sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello, you.
Welcome back to Buy, Hold, Sell. Well, with us today is Mish Schneider. She's the chief strategist over at marketgauge.com. And Mish, in the last block, you were just telling us that you are possibly expecting some more turbulent times. Do you think there's a Trump put at this point?
Well, I'm not bearish, mind you. I just think we're seeing a great churning of the market, and the things that have been outperforming will possibly take a backseat to the things that have been underperforming. And again, as we said in the first block, if you're smart about it, you can find some real gems. I actually believe this year will end on the plus side, but nominally. I'm not looking for huge numbers. I'm looking for more like a 3, maybe 4% increase in terms of the S&P prices by the end of the year. Of course, the volatility along the way, maybe some of it will have to do with the Fed. There's another sort of...
There's another put.
Another put, right, exactly. So, it's complicated. However, I mean, we still have a huge debt, by the way. Let's not forget about that. We're still spending a tremendous amount of money. And if you were listening to Trump last night, on one level, he was talking about all the money that they're saving. And on the other level, he's talking about tax cuts, which, of course, is not only stimulating for the economy in terms of people spending, it's also inflationary, and it doesn't necessarily mean a reduction of spending. And then you have the Federal Reserve and the Treasury debt, which is about $7 trillion, which has to be refinanced at a higher interest rates, is just too costly. So it looks like
A higher interest rate?
Yeah.
You mean the 1.8% cost that we have now in the money that's going to go to 4.9 to 5.2? That's more than a little bit.
Well, right. Okay.
Yeah.
I try to stay relatively understated. So, but the point
That's not
is,
how we roll here, Mish. That's
I
not how
know.
we roll.
Well, the point is, it looks like the Fed is going to cut. I kind of predicted this for March. People are saying June. I think it's going to happen sooner because we've seen so much contraction in terms of the economic statistics. So, that's a really long.
Hold it, back up there. I don't mean to interrupt you. Do you think the Fed at the next meeting is cutting?
I think they could, or at least hint to the fact that they will in the next meeting after that. They're still data dependent, but the labor numbers coming out this Friday will tell us a lot.
Okay.
Yeah,
That's
mean,
the
if you
first I've
believe
heard of
any
it.
of these numbers, I mean, you want to get real. I mean, I don't believe any of these numbers that come out, but because I know they're all cooked. I know they are, but nonetheless, I kind of made that prediction in December.
All right, Todd, I already love Mish because she actually, comes from a world where she understands that so much of the numbers are cooked. We like to just say just bullshit, but it's the same thing. All right, so let's talk gold, Mish.
Yeah.
I've been a gold bull here, for the psychological reasons, then the technical reasons. And what's your take on gold?
Well, I'm with you. I mean, in 2020, after the COVID thing, the first instrument I bought was gold.
Yeah.
Yeah, and I've been really basically in it since, and I am the constant gold bull. Not quite Peter Schiff territory, but darn close.
Yeah, but Peter's been wrong on everything for 25 years except for gold.
Exactly. So he's got
Yeah.
the broken clock thing going for him. But you and I have been right. And so what's amazing to me is how many people come out on any dip in gold, just the opposite of equities, to say it's over. That's it. Gold is done. And yet they think everything else is buy the dip. And I don't understand, because there's been nothing but fundamentals to support gold going higher. You've got central bank accumulation, China accumulation, you got the flight to safety. You still have the, inflation increasing. Now you have tariffs. You have geopolitical strife. You've got a possible debt crisis. Now you have a fiat issue with the dollar collapsing. I mean, every single thing you want to mention right now, to me, there's not, unless peace breaks out in the world all over, I don't, that would be maybe my case scenario, that maybe gold's over. But even more interesting to me, and so I see 3,000. Well, we're not that far away, right? I mean, people look at it as some like holy grail level. It's not that far away. So now it's what happens if we get through 3,000. And the way gold's been trading, again, as a commodities trader, I understand how these things work. So you get the move up, you get the sellers, the weak longs get out, you find a support level, you consolidate for a few days, you get the bears who try to force it down, and then you have the forced short covering, and then the new longs that come in to take it to a new level. This has been going on for years in gold.
Yeah.
So when it's going to change is when you get a move up, and you get like a coffee or an orange juice or a cocoa futures type parabolic rip your face off move, then things have really changed. And I've heard everybody talking to me about there's going to be the great gold reset and all this stuff. I don't think so. But I do think that we have not finished this, and we have not seen the parabolic move. And I'm even more interested in silver.
Yeah, it's so funny you say that. Again, fundamental and technical, but the fundamental to me was when Russia invades Ukraine and the United States locks up $3.5 or almost $1 trillion of Russian money, and then China looks over and says, "Well, they could probably do it to that too." So all of a sudden, we just track the daily purchase of gold by central banks, the largest ones, because they don't want to be holding dollars. They're converting their dollars into gold, and they can borrow against it, whatever. But when you get $2.5 trillion of your rubles locked up, it's they lost that war the minute they came through the Ukraine. So that's really why I'm bullish on it. Then again, the technicals, but then the other one we use the 2X, the GDXU, the ETF, and we use that long. And then we also, when we get to these levels, new levels, then we use it. We sell call options on it, et cetera, to hedge ourselves.
Okay,
But it's also the safety trade. I mean, it trades all over the world, and it trades, in dollars. So
and if there's any kind of crisis, which you're always going to see people like the old
flight to
subway
safety
walkers with the platforms, the end of the world is nigh. But if there's anything that really proves that we're closer to that, of course, that would be bullish for gold. But the reason why, right, like you said, exactly right. Gold has been really basically the classic flight to safety. This is why I'm focused on silver now, because if we really want to know, and I'm looking at stagflation environment right now. I mean, we've kind of been in it for 2 years. Nobody really wanted to talk about it. Now it's becoming a more mainstream word, and it's becoming more obvious.
It's the S word, by the way, Mish. It's the S word.
S word, right? Exactly. Yeah. But silver to me will be, I call it my inflation trifecta, right? So the first thing would be the dollar. Well, certainly the dollar is signaling an inflationary environment could be close. The second would be sugar futures, believe it or not, because food staple. Well, I started out in sugar futures, by the way, in the commodities exchange, but I saw sugar go up before gold and silver did in 79 and 80. And I started to study why. I was an analyst. I told you I worked for Continental Grain. I was Commodities. I had to understand why that was happening. And what I discovered is, A, it's a hoarding type of food source because it's in everything. If there's any kind of weather disruption, then really basically becomes very, very difficult to get. And it's also really kind of a comfort food, reach out for, especially for poorer economies. They will look for things, not whole foods, which are far more expensive. So the third one is the silver to gold ratio, right? And I'm sure
Yeah.
you've been around for a while, so you know what that is. So it's been kind of like gold trading 90 times more than the silver price. And now we're starting to see, maybe we're starting to see that flip. In 1980, gold only traded 17 times the silver price. So what does that tell you? Not only was that the highest inflation that we have on record in our lifetime, number one, but number two, it tells you that there's a lot of room for silver to start to outperform. And if
Wow. I'm going to call that Mish's Law, Todd.
Yeah.
Mish's Law is that when you have, and they all obviously are valued per ounce, when you have, what is it, a 70 times higher ounce
90
of gold
times
than
higher.
silver?
Yeah.
That's Mish's Law there. What would it come back to normalize, Mish, is my question.
Well, I think the first area we have to look at is 80 to 1, and we've flirted with it for a minute, but it goes right back to gold. So
Uh-huh.
I thought it was interesting because silver actually had a great move higher. Gold went up too, but if we start to see it break down under the 80 ratio,
Uh-huh.
I think it could easily, well, let's put it this way, let's put numbers. I think silver can go to $50 easily. And where would that put gold? Does gold have 4,000 in it, or would it be more like a 3,200 to 3,400? And that's really where you start to see the ratio be more obvious in the favor of silver. But more importantly,
Wow.
what does that say about inflation? Because silver is the poor man's gold, as they say. It's an industrial metal, of course, as well. But it also, when silver prices go up, that means that there's inflation in the neighborhood.
So
Wow.
at $50 for silver, though, I mean, it sounds like that's a price target. Is that this year or somewhere beyond?
You know what? I know it could happen so fast, Todd. This is what I'm trying to tell you is right now, it's been a very controlled bullish move in both metals. Obviously, gold better than silver. As I said, you get the new high, then the sellers come in, and then everybody blames the dollar, or they blame this, or they blame that. No, it's just the nature of the beast right now, because they both have been laying in wait. When you start to see the buyers come in on the strength and the dips becoming very shallow with another next run and the next run, like I said, just look at a chart of coffee futures and you'll see what a parabolic move look like. And of course, they end just as quickly. That 50 could happen in 3 days. I've seen it. I mean,
All right, that's Mish Law number 2 then, Todd, is that when you're playing these commodities, because I was sort of taught this too back in the day, is that there's the final ramp, because people said they were going to deliver cocoa beans or whatever, and they can't do it. So now they have to go pay market price with a market order to fulfill their contract. And then it comes back.
Right, but and by the way, there is a shortage of silver supply too.
No question.
And,
so why don't the miners, Mish? Why don't the miners trade, the silver miners trade, and the gold miners? They I know they're hard to figure out, and they're but again, I use this GDXU on the junior miners, and because the junior miners have been moving positively for the first time, that tells me we're at that part of the cycle where the miners may actually outperform the commodity. What do you think?
I completely agree. Classically, the miners have been the first to go up. Generally, I've seen that throughout history, where first you see the gold miners go, then the gold, then the silver, and we've had just the opposite.
Yeah.
But I think a lot of it has been manipulation, and I think if you read around, you can see that there's been price control and manipulation on the gold miners' price. And part of it is that there is still a lot of people out there who believe, whatever you want to call it, deflation,
disinflation.
I mean, right, there's so many words. Right. So and they don't believe it. They don't believe it. And I think that's where people are going to find out where they're really been wrong. And so that's why the miners are starting to catch up a little bit. I saw GDX finally got back over 40 today.
Yep.
Now you mentioned algos. We have quant models at part of our RIA. My husband and his team have created about 10 different blends. Yes, and our sector model bought GDX like last week for the first time in a long time. And of course, they use pretty generous stops, but nonetheless, I think now it's back to where it was, and it looks like the momentum is building.
Yeah.
And they're outperforming. They're outperforming the SPY. If you look at a leadership chart, if you compare the GDX, certainly the metals, but if you compare the GDX right now to SPY, it's starting to outperform. If that's not stagflationary, possibly inflationary, I don't know what is.
You know, Mish, I'll throw a couple other themes because they've been working for people at home. Look at your home insurance bill. How much? I mean, and I'm not even talking about Florida or now Southern California, but Florida, for instance, is a perfect example. We actually run a fund to self-insure a couple of old friends of mine that when they sold their company, they moved to Florida. They bought these big places in Tampa and one down in Palm Beach, and their $5 million house, the insurance was $500,000 last year. So one day, after the third cocktail, I said, and this guy's name happens to be Mitch, so I'm getting a little confused. I said, Michele, listen to me. We're going to do a fund that is going to fund your freaking insurance bill. You're going to self-insure. We're going to do a liability deal with Chubb Insurance. By the way, we've owned that. Those shares are only up 45% in the last 6 months. Then we're going to broker it through Arthur Gallagher, AG, which is up 55%. The entire space, either you're a broker and you're making more money because you get paid a commission, so it's on a higher premium, so therefore you're making more money, or you're the underwriter. And the underwriters have, and heaven forbid what insurance is going to look like in Southern California, where I originally grew up and, learned to play golf and tennis at Altadena Country Club, which is now like 15 sticks of wood. But that theme has become, and then I know you're a technical one, 52-week new highs, consecutively over 2 months sort of gets us to validate our thesis. So we're long that entire space. And then, you look at Verisk, VRSK. Verisk actually provides all the data to the property and casualty companies. And they are must have, I call it a digital utility. You can't price insurance if you don't have a $65,000 contract with Verisk to get the up-to-date risk analysis and all the payment. So I'm with you there, and it's
that
sort
is
of
inflationary. I mean, right, exactly. And not to mention right now, even though people are talking about some kind of a housing crash, I think existing home sales have to go up, not just in price, but in terms of numbers, because the cost to build is going to get more and more expensive. Lumber is at a 3-month high. Obviously, steel went up a lot today, along with copper. And so the cost to build and get insured, if you can even build it, insure it. It's so expensive. Does that mean people will stop buying homes? Not necessarily. I think they'll start to look for homes that are either existing, and of course, those people who have mortgage rates locked at around 3% would be.
They ain't going nowhere.
They ain't going nowhere. Right. So you're creating another different type of bubble, as opposed to what you hear the talking heads say, which is we're going into some housing crisis. I do not believe that.
Well, let's also on the 25 biggest, I'm trying to say this nicely, misstatements last night. The idea that the 25% tariff on timber, of Canadian timber coming to the United States, we have all the wood, we have all the timber we need. We don't need Canada's wood. Oh, really? Talk to a home builder, my next door neighbor, who just about, corralled me this morning on our run, saying, "Can you effing believe? Do you understand that a house that under contract that I wrote a contract for was based on these prices? I have to change that contract and have the total build, because still, shockingly, most houses are built with wood frames, and there's certain type of fir that you have to have because it's regulated. That comes from Canada. It doesn't come from Oregon or Louisiana or Washington or yada 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 or California. So." So prices to build new homes is the one thing that what they can, the home builder can always pay down the interest rate. And so therefore, I have a 3% mortgage that lasts for 5 years because it was paid down. But the internal cost of making that home goes up. There's so many second derivative parts, Todd, to what these tariffs could involve, if in fact they happen. But they may just be all a bluster, or it may be twice as much. How do you make decisions? So you know what? I know property and casualty rates are going up. So I don't. Trump has nothing to do with that. We're gonna put a cap on property and casualty rates. Well, actually, that's illegal. So those are the themes that we're playing, and then we sold most of our, we call the tech AI data stack, because we're only up 375% in 2 years. I don't know if that's good or not, Todd. I can't remember. But in a market that goes up 10% a year, I am totally also with Mish on that. All of this stuff has been pulled super forward. And if you're going into this year thinking you're going to get another 20-25% year, unless you are very, very tactical, no way. If you're buying this S&P 500, I'd be shocked if it was more than 8% for the year.
Okay.
I'm just saying 3, 4, half of that.
Yeah.
All right, we got a bet now.
I like that, and we're actually gonna solve that riddle when Mish comes back. We got to have her back on buy, hold, sell. But we do have to end it right there. We've covered so many topics in this show. It's truly remarkable. I know the audience is
I think when Mish breaks out of her shell, I think the show will even be better.
Absolutely. So, Mish, thank you so much for joining us today on Buy, Hold, Sell. We cannot wait to have you back.
Yeah.
Oh my God, this has been a laugh riot. I love it. You see, I hope your head's a little clearer now, Tobin.
My head's a little clearer now. I was sharing with you my trouble before we got on the air. but you've calmed me down, Mish, because your specifics and tactics are so well admired by us.
Yes,
thank you so much.
Absolutely true. So and also coming up, just a quick promo for tomorrow's show on Buy, Hold, Sell. We have Sylvia Jablonski. She is the CEO of Defiance ETFs. She's going to be coming out with a very special announcement exclusive to Buy, Hold, Sell. You definitely want to be here and watch what she has to say. So on behalf of Mish Schneider and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us today on Buy, Hold, Sell. We'll catch you next time. Take care.
Cheers.
Buy, hold, sell, brought to you by CrossCheck Management.